Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Welcome to week 6 of the Forex market review. Today we're going to have a look at the Dailyfx news, followed by two currency pairs, the CAD Yen and also the Pound Aussie. What you might have noticed, we're going to talk about the Pound Aussie because I tweeted that a couple of days ago, just advising that we're probably going to come off our lows and make some new highs. So let's go ahead and look at the Forex market, the Dailyfx news. So here we have is a Dailyfx calendar. And as normally what we do is firstly we filter on the high importance news only, and then we filter on our local GMT time. I've gone ahead and done that already for today, and then I've put it on a weekly view so we can see what news has occurred and what news is coming up. This week has been a very quiet week, and as you can see at the beginning of the week we've had a lot of holidays. We've had the New Zealand holiday on Monday, February the 8th, as well as Hong Kong and China holidays. Now these China and Hong Kong holidays flowed through to Tuesday, February the 9th, and flowing through continuously for the remaining part of the week is the China holidays. So Wednesday today, which is February the 10th, is also Hong Kong and China holidays, and then Thursday, February the 11th, we're going to have Japan and China holidays, and as we just indicated, Friday will also be a China holiday. This is the long holiday in China, which happens once a year. The lunar cycle, if I remember correctly. So therefore the markets in China have been very quiet, and as you can see, not much news has been occurring. So what's pushing the market is generally some lower and probably medium type news, and therefore you'd want to be taking a look at those a lot closer than just the high importance news. But for this section, we're going to be looking at Wednesday, the February the 10th. We got some China yuan loan numbers coming out. So we're just going to see what they come out as. And on Thursday, February 11th, we have Fed Yellen is going to be speaking. Now we'll see what results that come out of. And followed by Friday, we have the Euro GDP numbers. So Euro GDP numbers is going to be something to consider. Last month is 1.6. This month they're forecasting 1.5. So if we're going to see a better number than 1.5, we're going to see some strength in the euro. But if you're fundamentally weak, the euro, such as myself, you'd like to see the 1.5 or some lower numbers, and bringing some weakness into the euro, and hopefully bringing some further strength back into any pairs it correlates with, and any pairs it's parallel with, such as the euro pound or the euro USD. Hopefully you'll see the euro weaken and those other pairs strengthen. And late on or early Saturday morning here in GMT plus 11, we're going to see the USD advanced retail sale number come out, as well as the Michigan confidence numbers. Again, if you're strength in the US dollar, you want to see some positive numbers here. And at the moment, we're looking at 92 last month, 93 this month. So hopefully we can see the 93 or higher, and then we can see that strength in the US dollar. So here we are, we're taking a look at the CAD Yen, and CAD Yen starting on the daily chart. So at the moment the CAD Yen is in a down cycle, and we can see that because we can see it's stepping down where it's making newer lows and the highs are also lower. So that's a good sign of a downtrending market. So what we want to look at is to see where we can get into the market to get in at a better price and look for another move back lower. So if you're looking at the daily chart, you would have looked at this wave cycle here, and we would have said to ourselves, we're probably in wave 1, up for wave 2, down for wave 3, and this is back for wave 4, and we've started our 5th wave cycle lower. Now, if you had looked at this quite a few days ago, last week sometime, you would have seen that we came back to our 50% level, and we would have looked at entering the market here for our wave 5 lower on the daily chart, and we'd have put a stop losses somewhere up here to roughly where the recent bounces have been, and so we would have been looking around 400 to 450 pip stop loss and trying to make at least 700 to these recent lows. So now that we've made almost 400 pips, if you did enter these levels here, you probably likely would have be bringing your stop loss to break even, and that way we're no longer risking any money. We just got a neutral trade, and we're just going to see where it would deliver to. However, if you miss that position, you can always look at a lower time frame. So we'll jump down to the 4-hour chart, and as you can see, we have our pullback higher. So because this is a pullback of wave 4 on the daily chart, we also want to see an ABC cycle back higher. So here we're going to see an A, and then we're going to see followed by the pullback of B, and then we're going to see the pullback of push higher of C. So this is B back lower here, and then the final move higher is wave C. So that's very good. That looks to us that we have had our ABC cycle push back higher for our wave 4 on the daily chart. So now we want to be looking at the next move lower, and here we're looking at that 5th wave move lower. If we jump down to the 1-hour chart, what we want to be looking for is getting into a position here. So just before we jump down to the 1-hour chart, we just want to look for that divergence, and here we did have a lower low in price, and we did have a lower AO, but it wasn't a clear divergence. It didn't come back all the way to the 0 line and then made those new lows. So therefore it's not clear, but it's still classed as a divergence. If we look at the 1-hour chart, we can see lower low in price, and we don't really have divergence. It's very close. So what I would have wanted to do is just jump down a little bit lower to the 15-minute chart just to see roughly what's happening with that market. And if we push back down to these lower, and we can look down to here, it's just very unclear. So taking a move back high, you likely wouldn't have done that, and if you're fundamentally weak, the CAD yen, then you wouldn't have taken that trade anyway. So let's look at an entry based on a 1-hour chart. So what we do have here is we have seen divergence of a higher high in price with a lower AO. So that's a good sign that that wave 4 push back higher on the daily chart with the ABC cycle finishing. It's likely that we have started our wave 5 cycle lower. So divergence is a good indication for us. So now that's moved lower, we would have seen our first move lower, and we would have said to ourselves, well, this is wave 1. Again, we would be unsure at these early stages of exactly where wave 1 and 2 are, but we know where wave 3 is because it's the first largest AO. So once we've seen that large AO, that's why we would assume this is 1 back for 2, and this is 3. So here's our first large AO. We can see it's large. It's very big, bigger than the one before. And until it comes back to 0 line, which is done right here, that's when we can assume the end of the wave 3 cycle. So if we're taking the assumption this is wave 3 cycle lower has now ended, we're looking at for our wave 4 pullback higher. So taking our wave 4 pullback higher, we use our Fibonacci retracement tool. We use it from the high of wave 3 to the low of wave 3, and we're looking at an entry around the 50% level. That's where we're expecting the market to be pulling back to. So if we just drop in a horizontal tool there just around the 50% level, we can see that matches up with these previous support and resistance areas. So if you're taking an entry around there, you might say to yourself, oh, I might get in a little bit earlier, maybe around these levels here, because I don't want it to find resistance and just miss me out. Or you can just take the normal rule we like to follow. We want to take a minimum of 50% fib retracement. That way we can make our risk to reward. Now, if they're going to be putting our stop loss above these highs of around 200 to maybe 250 pips, we want to be making similar down to the lows, and down to the lows here we can make almost 200 pips. So definitely when it would come back to these levels here, it would be bringing our stop loss for break even and following it back lower. So let's just take the assumption that we're entering in this level here, and we want to say to ourselves, do we have any divergence indicating that this possible wave 4 is coming back higher? Just jump down to the 1 hour chart, or actually that was the one, we jumped out in the 15-minute chart, always the chart lower, and as you can see we do have a lower low in price, and we do have a higher AO or MACD depending what you're using. So because the AO's come back to zero line and then made its higher low, we have clear AO divergence, and that's a good symbol for divergence. So we could take that assumption and say that our move higher of wave 4 is occurring, so therefore we should have an ABC cycle. So if we're going to have a move up of A, back for B, and up for C, it's likely it may not get there, but at this stage it's still too early to tell. But because of our risk to reward, that's why we leave it at this entry level. We then want to determine where we expect the market to go. Again, we use this time, instead of our Fib expansion retracement tool, we use our Fib expansion tool. So retracement predicts where we think the market is likely to go, and the retracement tells us where we should be getting in. So that's from the recent highs to the recent lows, back up to the recent highs, and at this stage we'll just assume it's around the 50% level it comes to. Therefore our first exit point is down at the Fib expansion 61.8, with our next one at this 100% level. So we're going to easily be able to take an entry at the 50%, putting our stop losses around 200-250 pips. We're going to easily be able to make 1 to 2 risk to reward down to these lows, and this will be a good trade. Now let's jump across to our pound Aussie chart, and this is where we're looking. A few days ago I sent out a tweet with the chart, and I was saying to you that possibly we're going to see some moves higher, and that's because we can see divergence on the daily chart. We have a lower low in price with a higher AO. So the AO is clear divergence, come back above the zero line, it's formed a new higher low with a new low in price, so therefore it's likely that this move is going to make its way back higher. So as we jump down to a 4-hour chart now for the pound Aussie, we then would have said to ourselves, oh, we think this is probably wave 1, back for 2, up for wave 3. However, because I'm now seeing this smaller AO, I'm going to take the assumption that we're having our ABC cycle. So we've got an A higher, followed by a wave B back lower, and then the final wave C back higher. So taking that on board, we have an ABC. Wave C is also a wave 1. So we're going to have our A higher, back for B, up for C. And normally ABCs flow where A equals C. So if we've got a pullback of roughly around 50 to 61% is generally where it occurs, we want to see roughly 100% Fib expansion level. So put the recent lows to the recent highs, back down to the recent lows, and as we can see, the ABC cycle is pretty much ending right about these levels here, because we do have it coming to the 100% level. Now if this is wave 1, we're expecting wave 2 to pull back about 61.8% Fib retracement level. So from the lows of wave 1 to the highs of wave 1, we're expecting to pull back around the 61.8% level, and here you can see we're going to be finding some support. So if we just drop our horizontal line tool, as you can see, we're finding some support. So we probably want to get in around these levels and put our stop loss somewhere down 200 to 250 pips, maybe even 350 pips if you want it to be right out of the market. And we want to try to make double that. So we're going to try to make probably 400 to 900 pips. So looking at the daily chart, if we look at recent highs, we're going to see it's going to stop roughly around those levels there. And if that's the case, we're definitely going to make 10,000 pips, so we're going to make our risk to reward. So this could be a very good trade setting up on the pound Aussie. Thank you for watching this week's video, week 6 of the Forex market review. I hope the info has been useful and you're starting to get a good handle of Fib expansion, Fib retracement and divergence. I wish you the best in your success. Take care.